Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing from Westamerica Bancorporation, and let me tell you, it's more exciting than watching paint dry or maybe not. We are going to look at an event they are telling their investors about. It involves a press release and well, banks and press releases can be interesting when they are related to financial results, so let's find out what is happening. This report, filed on February 27, 2025, is a quick update. Form 8K companies use these to announce important events to their investors. Think of it as a corporate bat signal, only instead of Batman, we get, Westamerica Bancorporation. First, a quick introduction to the company. Westamerica Bancorporation is a bank holding company, which basically means they own a bunch of banks. These banks operate primarily in Northern and Central California. So if you're in that area, you might have seen their branches around. The main event highlighted in this filing is a press release. Companies use press releases to communicate news to the public, often about earnings, new products, or big changes in the company. In this case, the filing mentions that on February 27, 2025, Westamerica issued a press release. Luckily for us, the press release is attached as an exhibit, Exhibit 99.1. It's like finding the hidden treasure in this regulatory filing. So let's check out this exhibit, the press release itself, and see what Westamerica wanted to shout from the rooftops, or at least whisper to their shareholders. Here it is, the press release. Press releases can be anything. Some are long, some are short, but they are always optimistic. So let's get to it and see what the company is announcing. Alright, let's dive into the numbers from this press release. Westamerica Bancorporation announced their results. For the year, their net income or profit was $27.74 million, which translates to 98 cents per share. Now, before you think that's small change, it's important to note that this is nearly the same as the previous year, where they made $27.84 million, also 98 cents per share. While it may not be growth, stability can be a good sign in the banking world, right? So the first quick takeaway, the company's profits are roughly the same this year compared to last year. Next up, net interest income. This is super important for banks. It's the difference between what they earn on loans and investments and what they pay out on deposits. For the quarter, Westamerica's net interest income was $81.8 million. Net interest income is the lifeblood of a bank, and it shows how well they're making money from lending. The company is also reporting a non-interest income. This includes fees from services, things like wealth management, or even just monthly service fees. They made $10.9 million from these activities in the quarter. Diversifying income can make a bank less reliant on interest rates. Another number worth mentioning, the company had total assets worth $6.4 billion at the end of last year, December 31, 2024. This is a quick snapshot of everything the bank owns: loans, cash, investments, buildings, all of it. It gives you a general idea of the bank's size and financial power. Now let's hear what the CEO had to say in this press release. According to David L. Brooks, higher interest rates have increased deposit costs. This is something a lot of banks are dealing with right now. When interest rates go up, banks have to pay more to attract and keep depositors, which can squeeze their profits. The CEO also mentioned that they are keeping a close eye on credit and expenses. In uncertain economic times, banks want to be careful about who they lend money to and how they spend their money. It's like a family tightening its belt during a recession. Another key metric mentioned in the release is the ratio of non-performing assets. This is down to 0.19%. These are loans that are not being paid back, so a lower number is generally good because it means fewer loans are going bad, which can hurt a bank's bottom line. So what does this all mean? Well, Westamerica seems to be navigating a tricky environment of rising interest rates. Their profits are stable, but they are facing challenges with higher deposit costs. They're also emphasizing careful lending and expense management. Overall, Westamerica appears to be in a stable, if not particularly exciting, position. They're not shooting for the moon, but they're also not in crisis mode. The bank's focus on expense control and credit quality suggests a cautious approach to managing risk, but also a potential limit on growth. The biggest risk seems to be the ongoing impact of high interest rates. If rates stay high for longer than expected, it could continue to squeeze their profits. However, if they can successfully manage their costs and maintain their credit quality, they could be well positioned to benefit when rates eventually come down. In conclusion, Westamerica is a steady-as-she-goes kind of bank. They're not flashy, but they seem to be managing their business responsibly in a challenging environment. It's a bit like a reliable car, not the fastest or the fanciest, but it gets you where you need to go. Thanks for watching Corporate Decoder. If you found this breakdown helpful, give us a like and subscribe for more deep dives into the world of corporate filings. What companies should we decode next? Let us know in the comments below.